Hey everybody, Jeff Kennedy, CEO of Maverix Advisory Group, here with Max Kuhl from Notable. Max, how are you today?
Doing great. It's another beautiful sunny day in Portland, Oregon.
I'm happy that you're on this call with me today. I've worked with and been a fan of Notable for a couple of years now, and worked more closely with you and your CEO, Austin, over the last 12 to 18 months. And I feel like this is a good time to have this conversation kind of publicly. As people, anybody that's watched any of my videos on LinkedIn knows, we do 10-minute videos, no slides, unrehearsed, just two friends having a conversation. They get to listen in on it. And, the market has changed. There was a
Yeah.
time not so long ago when it was multiple offers, no inspections, big earnest and due diligence monies, no repairs, and it would sell, right?
Yeah.
And in a lot of places, that's not the case. I won't say every place, but in general. And so I feel like houses being ready to go, or I don't think you guys use the word market ready, right? Is kind of the direction things are going. But I want
Mhm.
you're boots on the ground. You work with some of the biggest brokerages in the country.
Yeah.
So talk to me about what you're seeing. Is that accurate? Is market ready really the way to go, or is that wrong?
Yeah, I mean, what we're seeing, so January was our best month ever as a company. Like, big leap in January. What we've seen is growth month over month, literally every month after that. So in what's basically not a super hot market, not a great market, not a lot of inventory, and in a lot of cases, a really sort of tough sort of time of the year. What we're seeing is month over month growth, even through we're pacing in May, above where we were at in April. Um, I think the underlying conditions are what we see is the underlying conditions are the same. So like Americans are equity rich and cash poor, right? American home owners have, only about sort of on average 2 to 4% of their home value in savings.
Okay.
That's been true forever. But what's happened is that their equity has sort of grown exponentially over the last, say, like 5 years, but their savings has not actually changed at all. It bumped in the pandemic and then sort of dropped back down.
So that means that they're living, I don't want to say check to check, but they're living, they're existing, they're keeping everything bills paid. The house
Yeah,
is appreciating every year, which is great. The house you bought for 500 is now worth 800, but you don't have enough cash. If you want to sell that house and get it fixed up and do carpet and do paint and do whatever the stuff that you need to do to really make it shine for that listing, you
yeah,
don't have the cash to just dip into your savings and spend 25 grand to fix it up. Like you just don't have it. So then you have to go and borrow it, which great if you go borrow it on a credit card, that hits your debt ratio, that hits your credit score, that has its own set of issues, the interest rates on that are fairly
yeah,
high. Or you do
yeah,
an equity line, which is even more messy because then it's an actual mortgage on your house. It's a lien, it's a whole process. There's closing costs, there's all the stuff that goes with that. Um, and so, Notable comes in, and what's your solution? Like, how is that? How is what you guys are doing better than those two options?
yeah. I mean, the biggest difference is that we provide those funds unsecured, right? So
Oh,
there's
yeah.
there's no hard credit check, there's no mortgage or lien that's placed on the property. Essentially, we allow somebody to tap into their existing equity without doing any of the heavy lifting or without incurring any of the sort of financial penalties that would come with like normally getting a loan.
Hmm.
So we're not hitting your credit score, which means that your credit's, in better shape, especially for those who are purchasing, which is more than 70% of home sellers. And so we're preserving their credit score. We're preserving their available cash because they're basically just tapping into the equity. They're not
Oh,
taking a loan or putting
oh.
money onto a card.
Think
And then,
think about that for a
yeah,
second. I'm thinking about it as we're talking about
yeah,
it.
yeah,
So I'm selling my house and I'm buying another house, and in all likelihood, I've got moving expenses. I got to put
right,
money, earnest money down, do the survey, do the appraisal. I got to put my down payment down, the closing costs, depending if they're covered or not. And then
yeah,
I got to clean my existing house out. Like there's a lot of cash outlay. The last thing
yeah,
I want to do is go find an additional 15 or $20,000 to fix up the house that
yeah,
I'm moving out of. Or what I'm stuck doing is trying to like do it really cheaply. And then the
yeah,
problem is it looks like it was done cheaply, and then it doesn't sell as fast and it doesn't sell as for as high a dollar. So you can save a couple of pennies and lose dollars. And then you guys
right,
come in and say, okay, cool. Look, based on your situation, we'll give you 20, $30,000, whatever is unsecured. You don't hit their credit. They get that cash up front. It doesn't affect any of their kind of family financial standing. fix the house up, and then I'm guessing they pay you off at closing? Like, is that how you guys
Yeah,
get?
they pay us back, yeah, off of their own proceeds. So we come out of the, we come out of the seller proceeds when they, get to that close. Yeah, what we found is that um, like the impediment to getting a home market ready is access to capital.
Hmm.
Right? It's
Number
like,
one. No, number one.
yeah, the number one, everybody knows, like, it's not a secret. Everyone knows that getting a home market ready is like going to lead to a more positive outcome. But what ends up happening is you have all of these, we're doing like, and I think agents do this a lot. They have to do all this mental, verbal negotiating gymnastics to try to like convince somebody of the exact ROI that they're going to get if they stage,
Yeah.
right? And the reason they're going through all those gymnastics and they're doing all that work is because the client actually doesn't have that cash. And so it's an awkward, difficult conversation. That's where all the sort of articles about like what ROI you're going to get when you replace the flooring in your house come from is not because like anyone actually cares about the ROI. It's because the home seller doesn't actually have those funds. So I mentioned the like 2 to 4% number, right? In terms of like
Yep.
home sellers have about 2 to 4% um of their of like 2 to 4% of their home value in savings
Yeah.
available. What do you think on average a home seller is spending just to get their home sold? It's two
Uh,
to 4%.
10, how much is it really?
2 to 4%. So
Wow.
like if you're a seller and you're gonna and that's national
It wipes
data,
you out
Zillow,
then.
Thumbtack, there's good data that supports that home
Sure.
sellers are spending between 2 and 4% just to get their home sold. So where is that money coming from? Right? It's credit cards. It's borrowing it from family. In a lot of cases, it's the agent that's coming in to put their own money up because they know that the staging is going to help and they're putting their own money in, which is pretty risky. That's not necessarily a great financial,
So it can be used for staging too, not just for fixing the house up, but for anything
oh
they have.
yeah, any expenses that the client is going to have in getting their home. And that's part of this kind of market ready concept is like anything that's going to help that home get market ready we want to be able to help them
Well,
do with those with those funds. So staging, photography, moving, storage, even things like temporary housing. A lot of agents want to get the clients out for that first weekend to do like a nice
yep.
beautiful showing. We can pay for the Airbnb for them to get out of the
Yeah,
house
yeah.
so that it's flexible and easy for them to show that to the
Something
client.
else gets missed sometimes in these conversations, and that's ROI, ROI. And yes, at the end of the day, this is a financial transaction and you want to make
Yeah,
money. And we know factually speaking, you will make more money that on a house that's fixed up than the one that's not. Now, what that percentage is, nobody in the right mind would promise anything to you because you don't know what the market is, and that wouldn't be smart. But what gets missed sometimes is it's not just the dollar amount that you sell the house for, although that is 1A. 1B is how quickly does it sell? You know,
right.
you can sit on that house, especially in this market, if it's not priced correctly and not fixed up, you sit on it for an extra month or whatever, like that's a real cost to you too. And that could be affecting maybe you have another house that's on a contingency. You really need to sell
Right.
this house. Like everything's linked to everything. So this just, I think across the
Not to
board,
mention your actual mortgage, right?
right? Oh, in
Like,
addition,
like
yeah,
if you're paying 3 extra months of mortgage because it takes that long to sell, you're
exactly.
just throwing that
But
like
you're not doing the work, right? There's other companies out there in the world that will come in and do the work for you. This is truly just a financial play for them to get access to their equity earlier. They're still in charge of figuring out whoever they want to use, whatever home improvers or
yeah.
contractors or whatever they can take care of. Yeah.
Yeah, what we found is that like the uh and I this, but like some folks watching might not. But like we've been doing this for 5 years. We've done over 30,000 transactions. We've issued over 1 billion in funds. We have a lot of experience working with home sellers, working with agents. And what we find is that agents, by and large, are like the best judge of what should be done to that particular house to get it market ready. And so for your house, maybe let's it's in great shape. All we need is a little bit of like paint touch up in one room, and then we want to stage it. For my house, I have 2 kids. They're, and a dog, and they're running around, they're banging into the walls. We're
Yep.
totally going to need to repaint. We're totally going to need to move a lot more stuff quickly in order to stage because there's trampolines and stuff everywhere, right? So like my house is going to be different than yours, and
Right.
my agent is not going to be like cookie cutter. Hey Jeff, you have to do exactly this, or hey Max, you have to do exactly this. And so the reason that we approach it that way is we want to just unlock the funds and let the expert, let the quarterback, which is going to be that agent, like help that client understand this is the thing that's going to help you with your particular property to get that market ready. And so by just unlocking the funds and letting them make the choice, what we see is like really good decisions being made by the agent and their client together. Because again, the thing that was blocking that was the cash. Once we unlock that, then they're like, great, I'm going to do this, I'm going to do that. What we end
Yep.
up seeing on our end is that same 2 to 4% across all those 30,000 transactions. On average, what clients are actually spending, even when they have much more, because we can, lend, more than that, like more than that amount, they're still spending about 2 to 4% of the sale price, even if they have access to like to more of that. And so it's really just removing that barrier so that they can work together to do the thing that
All
they
right.
want to make it market ready.
We got to finish up here on
Yeah,
lightning round. You ready?
yeah,
We haven't prepped on this. I don't want to stump you.
yeah, yeah.
Uh, no work, just funding, financing.
Hmm.
It's unsecured
Unsecured,
up to what dollar amount?
50,000.
Okay. What's the average that people take? And you said,
Our average SKU is pretty high, so we're like closer to the 800 to $1 million range from a listing price,
yep,
and then closer to about 20,000 in terms of what people actually end up using.
perfect. And this is not a luxury play though. Like some things are just for luxury agents and luxury listings. This can be used for anybody, correct?
Totally, and we have all kinds of brokerages all over the country and all kinds of different use cases.
Good. And because it's not actual fixing the house up, there's limited geographic limitations because it's just the funding and you can get the money and you work on your own. So that's
Yeah,
great. It feels like, as my closing statement, it feels like Notable is less of a tool and more of an actual strategy. Like when you sit down with your clients to list their homes, you would be silly slash stupid not to mention to them that Notable is an option. Maybe they have cash. Maybe they have $1 million in the bank. They don't need it. Great. But
yeah,
like you said, there's a lot of people in the United States that don't have access to cash. And if they did have access to five, $10,000, could get another 20, $30,000 on their home. That's
yeah,
a big, big deal for a lot of families. So I love that you guys have unlocked
yeah.
that, and we love watching you grow. And there's some big announcements coming this year. So appreciate your time today meeting with us.
Yeah, thank you, Jeff. Always great to talk.
You bet. Bye.